We're going to keep talking about what's happening with these markets, and we invite into the stream Corey Johnson. He's the money manager as well as host of the Drill Down podcast. Corey, it's good to have you back on Yahoo Finance Live. When we look at these markets, and I'm taking a look right now on my computer. I mean, for instance, the S&P 500, we were over 4,200, roughly 10 days ago. Here we are close to it. And you pointed out in the notes that you sent to us that the S&P PE is at its second highest level ever. What does that say to most of us as just average investors? Beware.
Well, maybe not. I mean, it's a trailing measure, but 100% risk is on, and risk is on across all markets, and risk is on across all assets. Yes, the S&P 500 trailing at a trailing PE ratio, trading over 43 is the second highest it's been ever, even when calculated back before there was an S&P. So these are some really high numbers. Then again, our economic productivity last year was so low. But because of the actions of world banks, this move towards risk is really happening in all assets. You know, your saving is your checking. Your checking is your mutual fund. Your blue chips. Your blue chips are your growth. Your growth is your late stage venture capital. Your late stage is your early stage venture capital. Everything is crypto. Risk is on, and we're seeing it across all markets.
Corey, where do you see the most speculation in the market? I think that's something that a lot of investors are trying to figure out right now. Yes, I guess you could make the argument that maybe some growth stocks or some speculation in some of those, certainly in the crypto market. But from your view, what are you seeing?
Yeah, I mean, I think you really do see people willing to take a flyer across all aspects of investing. And you also see it on a corporate level. You know, on the General Motors call this morning, you heard a lot of talk where Mary Barra sounded a lot like you'd expect a tech CEO to talk about all the investment that they're putting into notions around what they're calling super cruise, and this idea of automated driving and technologies where they're really investing really hard. All this talk of semiconductors, you certainly see it in the venture community. I mean, I'm here in the San Francisco Bay Area where you see a tremendous amount of investment, not just in venture, but really in early stage seed round venture. I listened to the Devon Oil call this morning, and it was really fascinating to listen to this company that is obviously engaged in the high-risk behavior of drilling for oil and gas, horizontal wells going 3 miles into the ground, at the same time that they're dealing with this massive merger, this $12 billion merger of two big oil companies that they took place last year. Of course, all of us dealing with COVID, they're pulling their hedges off. They're exposing themselves to more risk. They're saying that by the end of this calendar year, they're going to go from about a 50% hedged position to a 30% hedged position. They're going to put on that risk with hopes of the economic recovery and hopes of a rising oil price. And this from a conservative E&P oil company, I think it just shows you how risk is attractive across the economy right now, both to investors and to companies.
Yeah, but we also get risk that is sometimes the famous quote, irrational exuberance. And last time you were on, you warned about the risks with Tesla. Now, year to date, it's only down barely 5%. But there's a lot of competition coming in the EV space. You got NIO out there. Rivian's going to be going public. What would you advise people who are still hot on Tesla and Elon Musk?
Well, I think, results haven't mattered a lot for this company going backwards. It's always a dream about the future. But again, I mentioned that GM call this morning where Mary Barra was talking about 95% of the activities in the car could be governed by their software in 2023. And she's talking about 7 million vehicles out there that will have that. Now, Elon Musk has some great dreams for growth for this company, but it's definitely on the come with hope that it's going to be happening in the future. It's always worth remembering with Tesla that they lose money on every car. They just make it on selling their environmental credits. They won't be the only game in town in the future. And so, it's a bet. I think that the success of Tesla stock is not a reflection on what happens with the business. It's more of a fan club than anything else. So, it's been maybe a little painful for some of the speculators in Tesla in the last year, but the business is certainly going to change over the next couple of years. And that's one to be mindful of over the long term.
Corey, let's talk about the board's upholding Facebook's decision here for the Trump ban. I'm curious just to get your take, but they also, of course, said that they're pushing for more transparency just in terms of their policies going forward. Is this good investors? Is this bad for business? How are you viewing this?
Facebook, when I look at Facebook, it is just a cash generation machine. And they make so much money on their products on Instagram and Facebook that the noise that they're trying to, I think that they look at a lot of what's happening with the regulatory concerns as noise. It is such a powerful medium, but the company tends to survive these moments. As a joke years ago, I thought, what if you looked back and just bought the stock every time Mark Zuckerberg testifies before Congress? Then I started to actually do that, to buy the stock whenever the stock was down and he was testifying before Congress. And inevitably, a week later, it was almost always higher. And a year later, certainly higher. And over time, the returns from this business continue. Now, there's a lot of pressure for a lot of reasons. The things that have happened in this country and beyond about misinformation and people sort of hearing the voices that they want to hear as spurned on by social media and algorithms that optimized to keep you logged in, and the most upset you can possibly be is the most money that Facebook and Twitter and others can make. It's having a big effect on our society, and I think that we all see that. But it is not having a big effect on their business. It's only been good for their business. So they continue to create cash flow. They continue to make more and more money. And they continue to have an outsized influence on both the markets and on our society.
Corey, we're going to keep talking about Facebook, but I got to say thank you right now to you. Corey Johnson, not only a money manager, but the host of the Drill Down podcast. Good to see you here on Yahoo Finance Live.